Obviously it's no longer a white elephant, in the room. I think everyone is trying to solve the situation. The number doesn't look good, in the last year or so, but I think it's changing, and I'll explain why. The left-hand side chart is the sales unit in total, and then it's the sales unit year-on-year basis. So actually, when the Chinese government starting to so-called tape or make the burst of the bubble, the real estate bubble, starting in the 2020, you see the sales unit total volume is keep dropping, keep dropping, keep dropping, in terms of unit. But it is not solving the problem because there is also kind of like piled up inventory in the third and fourth tier city need to be diluted. So the new sales is definitely dropping, but we are in a stage that we have to solve the old inventory, problem, if you like. So in terms of on the right-hand side, inventory month, total, we are talking about 25 months, if you like. So at least to solve that problem, we are talking about 2 years timeline to solve the inventory average, over the last 10 years. But I don't think this data is relevant. It's 15 years because over the last 10 years, the cycle is very different. So our estimation is the Chinese economy need more than 2 years to really clean up the inventory. But why the market pick up is actually the government also bring up the bazooka in solving the real estate situation. The latest two is one, they're actually giving money to the domestic government and asking them to buy the finished houses and then change it to so-called economic flat, the social houses, for the people. I think this is a real solution. Although the original estimation ticket size is relatively small, but this is the beginning. So out of the 7 trillion, I think it's like a 500 billion or so type of like, ticket size. So I think we need 10x more than the amount that they approved in the first time. But I think this is the direction. And then the second direction is they are actually allowing the retail people to reduce the first mortgage ratio, even in the tier one city, Beijing and Shanghai. Right now, the first mortgage, you put down 20% of the principal, you can buy houses, which is historically, not big enough, historically not a very attractive level. They stop it for a long time, but they start putting it. So I think it would be a small bazooka, if you like, in that regard. It changed a little bit mindset. It's not well covered by the global market. Actually, it's improving. If you look at the Western media, every time they show you these two charts, you never see this chart that I'm showing to you, and it's in Chinese. It's circulate in-house in China. This is the secondary market turnover volume in Shanghai, and you can see the dates. It's on a daily basis. May 4th. On the left-hand side starting, and then until June 2nd, if you like. So this is, from our perspective, a good gauge and a leading indicator for the retail sentiments towards the property market. Because once Beijing and Shanghai is stabilized, hopefully it will go to the second tier city. Personally, I don't expect the third and fourth tier city will rebound in a short manner, because the investment quality or the investment value of those cities are much less than the first and second tier city. So the smart money, if you like, will go to the first and second city. Third and fourth will be solved by the government. But as you can see, the Shanghai secondary market turnover, is picking up, quite a lot starting, in May, and then in this. And, on the ground observation, when I talk to my friends, they are actually starting, buying houses. They thought, oh, this is the bottom. We think the government is coming in. The leverage ratio is good. And then the mortgage rate is very low as well. We are talking about 3%. And in certain cases, it can be lower than 3%. And if they put money into the bank, the risk, the bank deposit rate, we're talking about 1.8% to 2%. So actually, and there is a room for them to lower the mortgage rate as well. So I think from a risk reward perspective, this is very attractive, And not just Shanghai, my friends in Ningbo and Chongqing, the so-called tier two city, I'm talking with them as well. Actually, some of the retail people, they are trying to re-enter the property market. But seeing is believing. I think for the global investor, they would need to wait and see until, the first chart, which I mentioned, the sales unit of the new, houses or the inventory level to go down before they truly believe it's recovering. But again, as an investment professional, we're always looking for the leading indicator, and secondary market sometimes move ahead of this fundamental.